Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, December the 16th. The year's 2021. Let's talk trading. Keeping it simple. Know your broker. These videos are for educational purposes only. Your results may differ from mine. What am I talking about? Know your broker. Well, as you all know, there's different kind of brokers. There's fixed spread brokers, or bandits as I like to call them. There's ECNs, there's a whole bunch of different type of brokers. But you really need to know your broker, because each broker might have their own little nuance when it comes to rules and what happens at certain times of the day or certain events. I remember there was this one broker I had. I can't remember the name. It's been so long ago. But during NFP, they used to widen the spread for 100 pips. Basically, they didn't want you trading on their platform during NFP. I mean, it was evil, because the first time it happened, it was one of those, I forget, it's like open the account for $50 and they give you $50 kind of thing. So it was like a what the heck deal. And they basically, you know, took, a big chunk out of it because I didn't know about that. And here comes NFP, and boom, all of a sudden I see, that message come across the screen. And it was just like, you have got to be kidding me. So I remember that was a revenge trade. I had to get my money back from those bastards. And then there's some brokers on MT4, for example, they have a limit. Like if you want to put on a trailing stop, it has to be, 20 points or more. If you want to put on a TP or a stop loss, it has to be at least, 2 pips or 20 points away from the current price. I mean, different things like that. And sometimes you'll see the spreads change throughout the day. And then they have different rules. Like some brokers have bonus accounts, and you have to trade so many lots and hold the trade for so many minutes, and all of those things. So if you haven't, I would suggest that you review all your broker documentation, especially the parts that have to do with your actual trading, because I would bet it's been a while, if ever, that you actually went through that material. But you don't want it to bite you, so you need to stay on top of it. So when they send you those announcements, put it on your to-do list and get it done in either that day or the next day, because if you're trading, you got your real money on the line. You don't want something that can bite you. And on the other hand, you don't want to miss out on something that could have helped you. So know your broker. Looking at the monthly chart, if you remember the past couple of days, the candle was red. Well, look what happened. Candle's green. It might have had something to do with the FOMC yesterday, and then the British banks announced an interest rate increase, so the pound's going back up. And for the week, we broke across the previous week's high, and the week before that, we actually broke across that high too, but now we're coming back in to 2 weeks ago upper wick zone. All the gaps have filled, and you can see here we actually broke above the opening range for the month. We broke out, obviously we broke through the opening range for the week at 32.68. So that one trade there could have actually netted over 100 pips. And these are trades that we talk about almost every day. So these aren't hairy hindsight trades. We put these horizontal lines in, or the indicator puts them in. And for the week, we get a new one each week. For the month, we get a new one each month. And for the year, we get one. And just for reference point, we're 208 or 206 pips below the opening range for the year. And we're 307 pips below the yearly open. Now 305. Okay, we had an inside bar 3 days ago. Inside bar traders, look at all the gray and blue. You can see there's a lot of action there. So taking that long at the 68 line, which is the same as the opening range for the week because this was the Monday candle. Once again, worth over 100 pips. So it's kind of interesting that, whoops, that, two different trades basically gave you the same entry, whether it's the inside bar or opening range for the week. Right there, you had the same entry. And 133 pip range on the pound dollar. You can see here, looking at the buy zone chart, there was a definite move. And this is what we call a return bar. And this too is a return bar. So I'd be looking for price to get back to this level. It may or may not. Red Rats definitely had a couple of feasts there. Bias near R1 short. Well, it blew right through. Actually hit the weekly R2 and pulled back. So the pivot traders, it doesn't matter which candle color you use. Just go with that candle color at the line. I usually show this chart as H4 so we can pretty much see what it's done for the week. Okay, pivot. It looks like we missed the pivot. Okay, why? Oh, I know why. Show label. False. So we missed the pivot point today. 40.09, and we missed it by a little over 3 pips. So that's the first missed pivot, it looks like, this month. A daily pivot, that is. Weekly, we've taken that out. Monthly, we're about 61 pips away from it. In and out of the upper wick zone a couple of times. Out, out, back in, and then out again. The lower high, high, or low trade, you can see right here with the mid dot showing where that last short had been taken. You can see here price came down, and like it usually does, it'll come back, touch that, and then head down. So there were some nice trades to be had there. And if you look between this 3-ball and the 3-ball that put in those diamonds right here, that was your 50%. It actually hit it. Went all the way to the 78%. I think that's 78. Pullback or retrace, went back up, and then did it again. So for those fib traders, if you have the patience to wait on those trades as opposed to scalping in and out, it definitely would have paid off. And one other trade is, well, if you see a couple 3-balls, then you see a lower low and a higher high, taking the trade the other way at the previous 3-ball, that short could have paid off also. You see, it's not as good as the higher low, lower high, but this is more for long-term traders. When they see this setup, they're just itching for price to reach this point, and then ditto on the long side here. And you can see here, if you come across, it put in a lower low right there, and it's because it kept going down. This was a 3 ball at the time, so when price came back up to this level, that was a trigger to go long, and you see that would have paid off a couple of times too. And that's just a just another trade there, another setup to be aware of. Haven't talked much about that one. Ball mall lines definitely paid off. You see the trigger was at 32.80 there. We had a trigger at 33.60. That paid off. And then this hour we had a trigger. Actually, it went the other way for about 5 pips, so that paid off. And then here, the 50, then breaking through at the 45, paid off again. And if you look at this range here 2 hours ago, 93 pips. I mean, we've had days that aren't even 93. I can show you that by switching time frames. Oh, nope, that's fixed on H1. I'll have to do it on a different chart. Or I could just change. Let's see, do I have that? Let's see. We can do it this way, daily. So there's a 66, a 62, and 88. So we had more than an hour than we've had in some of these days. If you look at the last, 7 days, we've had 3 over 100, and the rest were under 90. So, but we've been seeing that on the charts, how price has been muted. And so we had 4 days in a row, and then finally 2 explosions. So what you can do with this information is you can see here, the 10 percentile, 20, 26 percentile. It's just like something's got to give. So that's when you start to look for the breakout trades, knowing based on statistics, 100's going to come soon. So here you had 100, then 2 under. Another big one, you had what? 1, 2, 3, 4, 5, 6 in a row. Well, then you had a huge explosion. Once again, these statistics, tell the story. And once again, just looking at the 3 balls, price moving away from the 3 ball. Now it's pushing it down. We'll see where it goes. Usually it probably is going to at least get to the midpoint before you see a reversal. Those are just observations. You can see on this chart, we went through the ATR zone. Now we came back into it. So if you trade ATR zones or ATR, you just go ahead and take that trade at the line. It's not like wick zones. ATR zones, you look for them. If it reaches there, that's when you want to start taking profit. And then if it exceeds it, you pretty much think price can come back. And right there, when it came below the previous H1 high, that's an indication of a short. And I think I used to call that top scraping and bottom scraping probably years ago, when just trading off the tops, the highs and the lows of these candles. Because see here, it came back through and up, and you can see it on a lot of these movements. So, fellow traders, I know knowing your broker is probably boring reading, but it's really important. It's just like knowing your platform. So, I implore you to take the time to really get to know your broker. And call them up too if you need to. If you have questions, don't be afraid to ask. Don't be afraid to look stupid, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.